Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. I'll come on up in here. Come on up in here. Y'all got me feeling lonely. Don't nobody want to hang out on Friday. Good evening. If this is your first time tuning in to Tim's Tidbits, allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. And that should be a big spot if you don't hablo español. And you are in tune to another episode of Yesterday Price Action Recap. You feel me? Yes, sir. Shout out to everybody that's pulling up, man. What's up, Valentine? What's up, Shatter? You know what I'm saying? And everybody else that's pulling up, man. We're going to go ahead and get into it. I'm not going to hold y'all tonight. I'm going to get right into it. Let me go ahead and share my screen. Ding. Yeah, we're going to get right into it, man. We're going to jump up. Let's go up. Let's go, since it's the end of the week, let's jump all the way up to a weekly chart. All right? We're starting off at the weekly chart. We want to see what a goings on. And we see that we still have not broken outside of this range that we've been in, right? We're still hanging out in the same range, man. We did come down and engage the weekly sell side. There we took out that weekly low, and we took out that internal swing low right here, right? As we can see there was a short-term swing low here, right there outside of that low there. So we had a short-term swing low there. We did come down, take out last week's low and sweep that short-term low, but we still have not engaged with the monthly sell side, right? And we're still inside this huge range, right? We're down here we're still in the discount. We've been talking about that. We've been in a discount of this huge little consolidation / accumulation / chop your freaking head off range that we've been in for a while, right? And as you see, we got this huge wick on the top and a decent sized wick on the bottom, giving us pretty much a doji, almost a doji. We opened and closed relatively close to where we opened at the beginning of the week, right? open and close. Now, we had a huge gap down, right? If we look at our new week opening gap, if we put that back on the chart, we had a huge gap down. But as far as, hey, which direction the price want to go, right? We're still hanging around there where we opened up at, right? Huge gap down. A lot of people attribute it to what's going on overseas with, you know, the WAR, if you want to call it that. I don't know if we've been in, I think you got to be involved for, like, the campaign got to be over a certain amount of time before you can classify it as one of those. But a lot of people attributed the huge gap down to that. And we just are right there around that price. So we came down, took out a low, traded up, you know what I'm saying, went higher, then came back down and closed, excuse me, pretty much where we opened, right? And that's pretty much how the week went, because we look at the daily time frame. We had spoke about that, right? We opened up on Monday all the way down here, gap down, right? We traded back up, right? Filled in all of that gap down. And we opened up on Tuesday, came down, and that's when we swept the short-term low, right? And left the monthly low there. That's the short-term low. That's the weekly low, right? Then Wednesday, right, we rallied up, took out that high, talked about that, gave us the bullish Judas swing. Then on Thursday, we ran buy side, then dropped down, closed back up. Then today, traded up, just melted down, all the way back down to the rejection block, all the way back down to the previous week's low, right? So we opened, came down, went back up, then came back down, okay? Now, question, is this a power of 3 week? Is this a power of 3 week? Right? We opened and went down first, came back up, took out the highs, and came back down, closed down there near where we opened. Is that a power of 3 week? I think not. I think not. That's just a whole lot of consolidation, whole lot of chop suey, right? Because on a power of 3, you want to see it open, and if we go down, right, you want to see it go back up and then close at or near the high, right? You don't want to see it go, you don't want to see it open down, go up, go down, go up, come back down. That's not a power of 3. That's just consolidation, right? That's just consolidation, because we came here, we opened, right there, traded up, we came down, took out liquidity, traded up, took out liquidity, then came back inside the range and closed down there close to where we are, right? So this bullish Judas swing we was talking about, right, that's still not invalidated till we take out that low, right? Once we take out that low, then we're moving into wig snatcher territory, right? Because we came down, took out sell side, rallied up, took out buy side, and if we come back down, take out sell side again, no, that's a wig snatcher. But right now, for the daily time frame, we're still consolidating here, and we're back down here in the discount of the range, hovering near around the weekly low, right? And speaking of low or lower discount of the range, let's look at our 20-day look back, right? So right now, our highest high is technically the monthly. Let's see if it's still that. Let's check it. I'm not going to say that. Let's check it. So coming from when we started trading today, if we go back 20 days, the highest high, right, is 1 day short of the monthly high. So close enough for government work, the monthly high and the monthly low. So last month's high, February's high, and February's low, that's our 20-day range, right? And I still got it anchored to the January high, right? But if we come and we anchor it in the same spot as the February high, right, we can see that we're right down there hovering around that lower quadrant of the 20-day look back. Right. So we're in a deep discount of our 20-day look back range, and as you can see here, we've closed that order block that we were watching. Right, we come here, check that order block. Right, we came down to the lower quadrant of that order block. Let's hide our 20-day look back. Right, came down today to the lower quadrant of that candle, that February 5th down close candle that we wanted to see act as a bullish order block. Came down, then we traded off of it and closed right around the weekly low, last week's low, and closed up under mean threshold. Okay, so we've closed under mean threshold, but we still did not take out the low of the week. Right, traded below Wednesday's low, but did not take out the swing low or the low of the week, meaning that this intermediate term low that we have been talking about is still intact. Right, and remember that intermediate term low solidified the fact that this low from November was a long-term low. I smile because I am important. Right, so still not showing the willingness to want to take out those lows, still trading inside of the range. Right, if we look at where price has been stuck, remember what Michael teaches, the bulk of your trading opportunities will be in between the upper quadrant and the lower quadrant of your dealing range, and that's just where price has been chopping and slopping for the most part. Right, we got some days where we pushed out, then came right back in, pushed out, and came right back in, but the bulk of the trading is resting inside there. Right, so our higher time frame is giving us what exactly? What kind of clarity? None. Right, giving us no clarity. Can we realistically look at the daily chart and say, hey, the NQ is primed and ready to go, it's going to go lower? Or hey, the NQ is primed, ready to go, it's going to go higher? Nope. Only thing we know is we're consolidating down here in the discount. Right, discount of our monthly range, discount, well, we closed just below our weekly range, and for our 20-day look back, discount, deep discount of the 20-day look back. All right, so hey man, sometimes the daily chart ain't gonna be giving you a whole lot. Ain't gonna give you a whole lot. Y'all do me a favor, man, hit a like for the algorithm, and if you ain't subscribed to the channel, you know what to do. Hit subscribe and turn all your notifications on, man. Now, anybody got anything before we hold on one second. Let me check something. Stay to 6. Yeah, 1806. All right. Hold on one second. Okay. All right. Any individual stocks have no, I don't trade individual stocks anymore. I haven't traded individual stocks in a long time. I just I day trade the index futures, but everything with price action, it works on individual stocks also, but I don't have anything that I'm watching in particularity. All right, let's jump down to a 60-minute time frame. All right, we're gonna go to a 60-minute time frame. As y'all see here, I got some P arrays that I was watching on the 60-minute. Right, a hourly, well, the 4-hour SIBI. We talked about that 4-hour SIBI yesterday. All right, that was the one that was up in the premium. We was talking about, would it be used as an inversion fair value gap? Let's pop up there real quick. All right, that was this one here in the premium, and then we also had this bullish one marked out yesterday. That's down here in the discount, the one from March the 2nd at 6 a.m. Right now, today I didn't have that one marked out today because I had some stuff on the lower time frame marked out that I was eyeballing today. Right, but this is the one from yesterday. And as we see here, once we came down and closed here on that 4-hour candle from 6 a.m. right, that candle closes at 10 a.m. Once we closed down there, right, we opened up the 10 a.m. candle, traded back up into it, right, and then we came back down. So right now, since we came back down and took out that low there, right, this 10 a.m. 4-hour candle is looking like it's being used as an immediate rebalance because we displaced lower, traded back up, and overlap the price action of this 2 a.m. 4-hour candle. Then the next candle started to leave the range. We came down and took out the low, but we closed, back inside the range at market close. All right, but it's looking like it wants to act as an immediate rebalance right here. Bear in mind that we are still being supported by the order block, right? This is the last down close candle of this bullish order block. So again, price is looking heavy, right? But remember what we said, know your invalidation points, right? Until we take out this low right here, that's the 10 a.m. 4-hour candle low from March the 3rd, right? Until we take out that low right there at 24,352 even, right? This buy program right here, see, we came down, took out sell side, traded back up, took out buy side. That gives us a bullish dealing range, right? So until we take out this low there, this bullish dealing range slash buy program is not invalidated, right? We have a very deep retracement back to the order block, but trading back to the order block is a signature of high resistance, and that's what we've been in for a very long time now. Okay, so yes, we are still inside this sale program, which back here we continuously extending it. Started here, created it, right, and we're still inside of this sale program, right, for this overall dealing range. Until we take out that high, this is not invalidated, right? So then we got a smaller, right, this is an expansion of that whole range, right, until we take out that monthly high. This little piece of it is not invalidated. All right, then we also have a smaller bearish dealing range inside of all of this right here. Why? We took out buy side, we came down, we took out sell side, right? So until we trade above last week's high, this short-term sell program is not invalidated, right? And then the buy program that started inside of that sell program, that's not invalidated until we trade below there, because we will extend this bearish dealing range right there, or we will extend this bullish dealing range, right? But until that happens, right, we're still in between the tale of two cities, okay? Because down here, you're not looking for reasons to sell down here, right? You're looking for reasons to sell in the premium, right? Well, Tim, what do you mean? Okay, this is our latest dealing range there. And if we get our magical Fibonacci tool, right, and we just go to consequent encroachment and run from the highest high to the lowest low, right, of that range, okay? So since we have made this low and started to retrace back up, right, coming back up here, we came what? Back above equilibrium, came back up into, what is that? Oh my goodness. We was just talking about one of those over here. Who remember we was talking about that first SIBI right over there after that turtle soup? What do we have here? That first SIBI after that turtle soup, right? We traded all the way back up into that same thing, but this is on the 4-hour time frame, right? And then we sold back down to the discount, right? So we don't look for reasons to sell down here. You look for reasons to sell up here. Somebody asked me about this yesterday. They was like, do you always establish your dealing range first? Yes, and this is why, right? So you'll know when should I be looking to sell and when should I be looking to buy, right? If I'm in the discount of my dealing range, I should not be looking for reasons to sell until the algorithm sets up a new bearish dealing range. Then I need to operate within the bearish dealing range that I'm in right now, right? If I'm only looking to go along with the higher time frame or go along with, you know, what's happening at that moment in time. But once it comes back to a premium, now I can look for reasons to sell, right? But while I'm in a discount, I'm either looking for reasons to buy or just sit on my hand because I feel like, hey, the market is bearish and I'm not going to try to go against the grain. So as long as I'm in a discount, just sit on my hands. All right. So right now we move back to a premium of the range, and to that, say it with me, first fair value gap that was created with this displacement down after that turtle soup. Right. So we traded back up into it and it sent us back down. Now, right now, we really can't say if it did its job or not, right? Because the market has closed. Price has stopped. This fair value gap's job is to extend this bearish dealing range. Right now, we can't say, oh, it hasn't done its job, right? Why is that? Because we don't know what the algorithm is going to do until we come back up and take out that high right there. Then we can say, oh, this didn't do its job, right? Now, we can, if we believe that, okay, the market is actually bullish right now, right? We can, once we start seeing signatures of obeying bullish price action or order flow, we can say, okay, he's not going to extend it. Let's look for a reason to extend this bullish dealing range. Okay. But you always want to be careful, especially when you're in high resistance, highly manipulated conditions, because the market is clear that the market is being held in a range. And when the market is being held in a range manually, that manual manipulation is that X factor that nobody can account for. That's why in conditions like this, it's best to front run your trades, like trade back to the order block instead of the swing low, back to the fair value gap instead of the order block, right? Back to a quadrant level instead of the swing low or the order block. Or, you know, you pick strategic exits, especially during high resistance, because you never know when Phil is going to push the button and stop price from reaching that sell side, or stop price from reaching that buy side. Okay. All right. And then we was looking at on the 60-minute. These are the PD rays that I was monitoring on the 60-minute. Instead of having that 4-hour marked out, I wanted to fine tune it. Right. Had that BISI marked out right there because we had a swing low that was resting inside of it, right? And whenever we have a swing low resting inside of a bullish fair value gap, that's tasty to the algorithm. And so it's going to attack that if the bearishness holds up. And then I had this BISI from March the 4th at 2 a.m. marked out because this right here was the lowest imbalance in this bullish range right here, right? And it was down there, right there inside this huge bullish order block right there, right? So we got a bullish order block and a bullish rejection block. And if I turn on my crosshairs and hover right here where we close price at, right, we can see that price closed roughly around the low of that bullish order block. I mean, the close of that bullish order block. Then we immediately went back up. That's a propulsion block, by the way. Then we came back down again, and then we closed up here well above mean threshold of the propulsion block. Right, so right now still showing some respect for the propulsion block, showing respect for the bullish fair value gap, but again, right, we just stopped trading, so we don't know if price was gonna just continue to run lower or if it was just blowing off steam to round out the Friday. All right, so all in all, this week was especially during the New York session was a pretty challenging week for myself, and I can only speak for myself. It was a pretty challenging week to read price because it was a lot of high resistance. We walked through like every day this week, so there's no need for me to like really recap what price did as far as the entire week. But if we look at what price did for today after 9:30, right? Again, just terrible, right? Terrible price. This is our 9:30 open. We traded up, right? Back up here into this lower quadrant of, what is that? I got marked out. I'm trying to see what this is. I have marked out. Oh, the daily range, right? That's the lower quadrant prior to us making that low. All right, so if I come down to when we actually made the low before going back up, right, we came all the way back up to equilibrium, right, after we extended this bearish dealing range. Okay, extended the bearish dealing range, coming into the 8:30 news candle, right? The market traded, popped up quickly into the CIVI, then came all the way down and extended the bearish range, right? Then once we touched that lower BISI there, we rallied all the way back up, right? Sweeping out the buy side, the pre-market buy side, trading up to equilibrium of our range, right? And then just a whole bunch of, even before we hit the equilibrium, a whole bunch of back and forth chop, slop, chop, slop. Then you see here in the afternoon here, right? Once we open up, chopping and slopping for a little while. Then we finally pop up, engineer relative equal highs after engaging the opening range sell side, right? And then once we popped up and create those relative equal highs, we quickly displaced away on the next two 15-minute down close candles into the old weekly low, the previous week's low, and then just sat there and consolidated at the end of the day up right after we dropped down into that BISI one more time and sweeping that 9:30 a.m. Swing low, right, from our open. That's the swing. That's the New York morning swing low, right? Then we just hung out there at the end of the day. So like I say, it was a extremely difficult week, especially during the New York mornings. A whole lot of high resistance, whole lot of back and forth, very volatile ranges, very volatile, right? Because we look at the range we traded in from 10:15 up until 2:45, right? Grab the wrong thing. Let's get the right tool, right? We can see that that's 182 point range, and we're trading inside. Very volatile, huge range we was trading inside from 10:15 up until 2:45 all day. Plenty of people going to the reset line right here. Plenty of people going to the reset line. Hey man, that's all I got. Y'all do me a favor, hit a like for the algorithm, subscribe to the channel if you ain't, and turn all your notifications on. Hey, Andre, you got any particular tickers you want to look at? Yeah, you have a great weekend too here to learn and share. You got any particular tickers you want to look at, some you was looking at, or any particular questions about a stock? I don't really look at individual stocks, so I can't really answer fundamental questions about them, but we can look at a ticker if you want to look at a ticker. Did anybody pull up in the Zoom with me? I was feeling so lonely over there. We got Rhonda up in there, Jim, Lump.
What's up? I ain't got nothing. We about to run to the charger. I'm about to get off.
No, you ain't got to run. Just go ahead and drive the car over there.
He'll drive the car over to the charger. But yeah, no, I ain't got nothing. My brain been working on these last couple classes. So
That's good. Your brain been working. That's good.
yeah.
It's hot up in here, boy. Hot back here under these lights.
Yeah.
Man, my clock up there says 84 degrees over here where I'm sitting.
Nah, your clock got a temperature on it?
Yeah, it's got the temperature on. Look clock. It's got like.
Oh, you got a 2026 clock.
At first, I thought it was a temperature outside, but it's just the temperature.
And here and there, yeah, that's what's up.
Cause I'm like, man, why the temperature won't adjust? And then I realized it was showing.
Well, that was a gift.
Huh?
That was a gift. Oh, you bought it?
I bought it off Amazon. Got the what's the name? It was on the did Mama try to call me 14 minutes ago? Got the what's the name? It's got the I just sent you I'm putting Mike in the let's type of Mike in there. Alright, man. I guess Andre ain't stuck around. Andre gone. He just ain't got no ticket he want to look at. Hey, man. I appreciate y'all for hanging out with me. If y'all feel like y'all ready to try a prop firm, Apex got a new setup. They got new plans. I rolled that. They have an 85% off sale right now. Like the second or third link in the description. Use my code. I appreciate everybody that used so far. I'm trying to get that big dog money from the affiliate links, man. They say them affiliates be making 6 figures off affiliate links, man. I need to grow my channel so people can use my code, man. They be like, man, they be talking about people be making 6 figures all day. I saw an interview with one dude. He was talking about he made like $3 million over the span of 2 years just off affiliate codes. I said, what? What am I doing wrong? Hey, man. What is that? I'm sorry, y'all. Squirrel. Hey, tomorrow's Saturday. Okay, nothing going on with the gang. Got a meeting up with the teenage mentees in the morning. So that mean, and then we had our monthly Q&A Sunday. So that mean I won't see y'all until Monday, gang. Monday at 9. Monday at 9 for the pre-market analysis. I had a brain cramp real quick. Monday at 9 for the pre-market analysis, man. Appreciate y'all for hanging out with your boy. Y'all enjoy y'all weekend. Again, this was first time tapping in. I appreciate you, man. It was Friday. Don't force it Friday. Wasn't a whole lot to talk about in price today. Right? So it is what it is. Live to trade another day. Hopefully ain't nobody blow no accounts today. Hopefully everybody ended the week green. If not, hey, go back and study what you did so you'll know the potholes to avoid in the future. And until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action, it's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That just mean big spot if you know I blow that man. Yo, y'all be safe out in these trading streets, man. Gone.